That's my take. I mean, it's unclear, but so a couple of things. One, they've had 50 years to build up the gold manipulation apparatus. I mean, even longer than that because they started with the London Gold Pool in 1963. So, and there are cables from Kissinger and others talking about how they'd make gold volatile and nobody would ever ask for delivery. And I mean, there's a lot of evidence that gold was heavily, heavily manipulated. But one important difference between the two assets is that gold has never gone up 500% in 6 months.
If you found this helpful, please like, subscribe, and turn on notifications for more insights into the digital asset space. Your support boosts the algorithm and helps this channel grow immensely. Drop your thoughts in the comments below. Thanks for watching and enjoy the rest of the video. Lepard begins by challenging a long-standing assumption that gold reserves, particularly those held by governments like the United States, are fully intact and verifiable. He points out that U.S. gold reserves, stored in places like Fort Knox, have not been properly audited in decades. This lack of transparency raises uncomfortable questions. While there's no definitive proof of missing gold, Lepard suggests that historical events, like the London Gold Pool in the 1960s, may have led to portions of U.S. gold being quietly mobilized or depleted. The core issue isn't whether all the gold is gone, it's uncertainty. Gold, by its nature, requires trust. Trust that it exists. Trust that it's not encumbered or leased. Trust that it can be accessed when needed. And in modern finance, where speed and verification matter, that trust becomes harder to maintain.
I agree. Back to the gold Bitcoin conversation. I mean, that's the other thing. I mean, with gold, you can always bluff it, right? I mean, so we theoretically have 251 million ounces of gold, stored in Fort Knox and New York and Denver and all these West Point, all these vaults, and yet they haven't been audited since the 50s. So, and my belief is that some piece of it, not all of it, but some piece of it's gone. Some piece of it, what I was told by some people who knew people now deceased that were in the Johnson Treasury administration, that this fellow knew some of those people, and he said that basically they told him that when the London Gold Pool was taking place between 63 and 68, Johnson made the mistake of sending some over there to support it, and he kind of raided Fort Knox. And so, I mean, and it's interesting too, right? I mean, Trump comes in, and one of the things they're talking about, we're going to audit Fort Knox, right? I mean, remember that? And suddenly it's gotten very quiet. My sense is he got read in that, nah, we really don't want to do that. That's not a good idea. And at least with Bitcoin, you know where it all is. You can see it. It's all on chain. It's there. You don't necessarily know whose address is what, but you know that it's all there, and that's the limit. And there's a certain certitude about the math of how many of these things there are. And with gold, you just never really know. Who's got it? Is it real? Where is it stored? Has it been audited? How do you move it? I mean, as Lynn points out, gold started getting demonetized when the telegraph came along. I mean, we all remember the stories of the Pony Express, and you watch Butch Cassidy, and they used to blow up the train that had the gold on it that was going to pay the payroll. And along comes the telegraph, and suddenly a bank in New York can send a bank in San Francisco a bunch of money, and they can do it just through a telegraph message. Debit this account, credit that account. Well, the soundest money we've had. I mean, not the best, because it lost the medium of exchange function years ago. I mean, really. Although, my grandfather, I mean, in the 1920s, you could take a gold coin in and get $20, and you could theoretically pay for things with gold coins, and some people did. I don't think it was a widespread practice, but it wasn't unheard of. Imagine trying to pay for something with a gold coin today. That's just like never happens. It's been so completely demonetized in terms of everyday life. All it really became was a superior form of sound money, and those of us who are gold bugs always knew that we would have to come back to that, because as Voltaire told us, all fiat currency eventually goes to its intrinsic value, which is zero. And we're now living through another one of those episodes. Money is just a representation of goods and services that it can purchase. The system, as you point out, is designed whereby they absolutely have to increase the base layer of money to support the growth through debt. I mean, the whole system is debt-based. It's not equity-based. That's one of the things that will change, by the way. If we go to a Bitcoin system, there will be a lot less debt, because debt will be more expensive, since things will become deflationary, which all the Keynesians tell us is horrible, but in fact is actually quite good. I mean, imagine your money buying more year after year. And if we go in that direction, the whole thing will get turned on its head, and that won't make sense. That's my take. I mean, it's unclear, but so a couple of things. One, they've had 50 years to build up the gold manipulation apparatus. I mean, even longer than that, because they started with the London Gold Pool in 1963. So, and there are cables from Kissinger and others talking about how they'd make gold volatile and nobody would ever ask for delivery. And I mean, there's a lot of evidence that gold was heavily, heavily manipulated. But one important difference between the two assets is that, gold has never gone up 500% in 6 months. So if you're a manipulator and you're trying to hold the price of gold down, all right, fine, you can do it. The BIS can do it. Hedge funds on the Cayman Islands can do it. Large GSIB banks can do it, whatever. And if the government wants you to do it, maybe they bail you out through the back door by giving you some free printed money, whatever. A big year in gold is it goes up 20%. That's a big up year in gold. There've been some bigger ones, not many. Last year was bigger. The late 70s were a couple of years that were bigger. But generally speaking, gold's pretty stable in terms of its price movement. But as we all know, Bitcoin can double or triple quickly. And if you're short something that doubles or triples, you're wiped out. And so, my sense is that while people are applying leverage to Bitcoin and creating paper Bitcoin, derivatives and synthetic things around Bitcoin, they're going to get their head chopped off because when it moves against them, they're going to have to move so incredibly quick to cover that, the price will jump right through where they thought they had a stop loss. And that's actually the real point, because that exists. And it's what makes this asset so hard, is the volatility of it. That's really the only thing they can criticize it for these days, all is volatility. And over time, as it gets widely accepted, it won't even be volatile anymore, but that's, years down the road. But the volatility of it, just, so let's assume there's a lot of people who are short Bitcoin right now, short paper Bitcoin. I think there are. I think some people used it as a short against being long the Mag 7. I know that trade was on for a while. When it changes, when the psychology changes and it really starts to move, and say it pokes through 80 and then 90 and then 110, and it's clear that, it's not just going to stop at 126. There are going to be a lot of people on the wrong side of this who are going to be forced to cover. And by the way, those are the people who are going to drive it. I said this in another podcast recently. It's not going from from here to 126, or to 180. It's going to, 250 or 400. I mean, because all of the people who are on the wrong side of the boat are going to have to shift to the other side of the boat. And by the way, then it'll get to 200 or 300 and it'll, probably be overbought, and it'll back off again and come back down to 200 something. I mean, that's the nature of a new monetary asset being adopted. It's going to be a volatile affair, and Saylor points that out, and that's why it created Stretch, because a lot of the capital in the world doesn't want to play with some piece of equity that's that volatile, even though it's one of the highest performing pieces of equity in the world, if not the highest performing historically for 16 years. People just can't stand that volatility, and so that's why he stripped out, the base layer of that and said, all right, buy it. You can effectively buy Bitcoin. You don't realize that's what you're doing, but you are, by buying Stretch, STRC, and you're getting 11.5%, annual real return. Oh, and by the way, because it's a return of capital, it's not tax, it's deferred tax. Your basis is going down. And so, the boomer class, a lot of people in my age group and some of my friends who have a lot of money and are thinking, how do I get a yield on my money? And, they're maybe getting 3 or 4%. Suddenly realize, I could get 11.5% in this thing. That's interesting. And so they come and they buy it, and that gives Saylor more capital, and he takes it and he buys the more volatile underlying, coins. And as long as the return on the coins exceeds 11.5%, his equity grows in value. It's a great model. And, he's going to push it until he's the richest guy in the world, which I think he will be, in 5 years or 10 years. So it's kind of an amazing story. And, it's exploding heads on, Wall Street and corporate finance and business schools. I mean, nobody, this is the biggest financial story of the last 100 years, and nobody's paying attention. I mean, you are, and I am, and Bitcoiners are, and some others are, and he's getting a little time on CNBC and so forth. But I don't think people really deeply understand what he's doing. I mean, there's some guy on Twitter who, Bridgewater guy, he's still calling it all a Ponzi scheme. And I'm like, dude, you just don't get it.
In contrast, Lepard highlights Bitcoin's defining advantage: absolute transparency. Bitcoin operates on a public blockchain. Every coin, every transaction, and the total supply are visible and verifiable in real time. While wallet ownership can remain anonymous, the system itself is fully auditable. This creates something unprecedented in monetary history: a fixed supply 21 million coins. No central authority, no ambiguity about reserves. For Lepard, this mathematical certainty is a game changer. Unlike gold, which must be physically stored and periodically audited, Bitcoin eliminates the need for trust in intermediaries. You don't have to wonder if the supply is real, you can verify it yourself.
That's what I see. Oh yeah, much better world. I mean, I think there's no doubt that the thesis of my book is that trend away from sound money to the point now where money is just incredibly unsound. And I would say it's an increasing trend that started, it started with the founding of the Republic, but it got worse at every step. The founding of the Fed, the Roosevelt confiscation, the Nixon, taking us off the, exchange standard, etc. It's broken society. I mean, it's really, really broken society. There is no middle class anymore. The middle class is suffering. The wealth extremes are just outrageous. And it's time to fix that and to make the playing field level. And the only way to do that is to make the money sound again. We built a great world and a great economy on sound money. And we went off it. And in doing so, we're running the world into a ditch. And so the only way to go back to that is to go back onto sound money. And yeah, when we're on a sound money Bitcoin standard or Bitcoin gold standard or gold standard, and I imagine there'll be some kind of a hybrid of a couple. I think probably they'll try gold before Bitcoin. I mean, there's been talk about a monetary reset, although I'm not 100% sure, that they'll have the courage to really do that. I fear that what's going to happen is they're going to just let it keep running until we get to inflation, very high rates of inflation, bordering on hyperinflation, and then maybe they'll do a reset. Or maybe the currency will completely fail, and people will say, okay, that was no fun, let's transact in real stuff again. And, the dollar won't spend, and gold will spend, and Bitcoin will spend. That's kind of where I think we're headed. And, when we get there, it's actually going to be really good. I mean, people think, well, that's going to be very painful getting there, and they're correct. I mean, currency failures aren't fun, but I've studied a lot of them, read about all of them, or many of them. And the one thing that is true is that when you go back to sound money, things get better very, very quickly. I mean, if you can avoid a war, or we're not doing that right now, but in general, if you can avoid a war and you return to a sound money system, everything organizes around the new form of money, and people go back to work, and you can repair shit. And now, the people who were, going through the hyperinflation, certain people got more badly hurt than others. And certainly older people suffer the most in hyperinflation because they don't have the earnings ability, the earnings power to recover whatever savings or pension they might have lost. The younger generations just, if they didn't have any savings to begin with, they just kind of pick up and they've got labor and off they go, and, the world becomes normal again. And so we've seen this in a lot of countries. I mean, it happened in Ecuador, it happened in Weimar Germany, it's happened everywhere. I mean, so you can fix hyperinflation by going back to sound currency pretty quickly. But sadly, there aren't a lot of instances. There's some, but there aren't tons of instances of, inflation got bad and we went back to sound currency. I mean, in many cases, it has to run the entire length. It's a total currency failure, and then you fix it. I mean, we got a couple of countries that are kind of in that mid stage right now, like Turkey is one of them, where they have haven't gone hyperinflation, but they have really high rates of inflation. Some of the South American countries went through that as well. And we could be in that condition. It's just that I think if we're in that condition, if the U.S. gets to the point where we're running double-digit inflation regularly, my sense is the political outcry is just going to be enormous. That people are just and somebody is going to stand up and say, "I am a sound money politician. Elect me, and we will return to a form of sound money," and they're going to win overwhelmingly. And the reform will happen. That's my belief. It's a little bit of a hope, and I suppose someone would say, well, that's naive, that's not going to happen, but I'm not so sure. I mean, it could happen, it could not happen, we'll have to see, but I think it's a possibility, and that's what I hope. All the currencies are failing, and who knows? I mean, there'll be wild cards. I mean, China could come in and say, hey, we're going to back the yuan with gold, and suddenly they've got a sound money, But right now they're not doing that. They're printing as much money as we are, so it's not as if they're cleaner than we are. But what'll happen, my view is what's going to happen is this red team that's now running the show, and started us down this path of war, is losing traction very rapidly. And, it seems certain to me that at the midterms and probably at the presidential level, the other team will win. Just because, it'll be who knows, and they'll probably put up a terrible candidate, but they'll still win. And mainly because the average voter will think, throw the bums out. I mean, this sucks. The other side can't be worse, which isn't necessarily true, but, they'll do it. And, the blue team will be worse than the red team with respect to spending. I mean, they'll go to universal basic income. They'll forgive all debts. They'll do stimmy checks. I mean, all of it. And it'll just get worse and worse and worse. So again, I just can't emphasize how important it is for investors and individual people to take this is a multi-decade affair, or certainly multi-year affair. Could be a decade from inception. I mean, I think peak deflation was in March of 2020, and we changed to inflation after that. And so now we live in an inflationary world, and until that gets resolved, saving in anything that's not sound money, not printable, is a bad idea. And the people who have their assets in sound money things are going to be, in my view, they're going to benefit incredibly well, compared to people who don't. And it's going to be kind of sad. And maybe there'll be people who say, well, that's unfair, but no, I mean, everybody has an equal opportunity to buy sound money right now. I mean, you can stick with your 401k and the S&P 500, or you can go buy MicroStrategy and Bitcoin and gold. Pick one. And, guess what? If you pick the wrong one, in 10 years, you're not going to be as well off as somebody who picked the right one. It's going to be really, in my opinion, it's going to be really noticeable, and so
Yeah.
it's kind of like, all right. I mean, I talk to a lot of potential investors in my fund who have a lot of stocks, and they're wealthy, they're very wealthy, and they have it all in the stock market. And I'm like, well, that's great. And their answer, I said, why? And they said, well, it's worked for me. And I get it. It has. I said, okay, that's fine. You had a 40-year deflationary trend, but now things have changed. And we're in an inflationary environment. The last inflationary environment was the 70s, and stocks were flat for 10 years. Gold and oil, were the best performers by far. Don't you think you want to consider, getting some of these sound money assets, even if it's not all of your assets, even if it's 10% or 20% or 30%? I mean, don't you feel like you need to have something over here? And some people say yes, and a lot of people say, nah, I don't need that. But I think those who said nah are going to kind of regret it in 10 years.
Lepard also addresses the idea of market manipulation, particularly in gold markets. He suggests that institutions have historically been able to suppress gold prices through coordinated efforts and derivatives, but Bitcoin presents a unique challenge to manipulators. Unlike gold, Bitcoin can experience rapid price increases. Short sellers face extreme risk if the price spikes. Volatility makes sustained suppression difficult. He argues that if large numbers of investors are short Bitcoin and the price rises sharply, it could trigger a cascade of forced buying, driving prices even higher. This dynamic, while contributing to volatility, is also part of Bitcoin's growth phase as a